This week I processed a $2,300 payout from FTMO, and that brings my total amount of payouts to $14,600, all made with one strategy. And in this video, I will show you how this strategy works. I will go through every single step and I will show you some example at the end. Okay, so let's start with a little disclaimer. This strategy works on any market and it's for both swing trading and intraday trading. So it doesn't matter if you're trading on higher time frames or if you're trying to scalp or just intraday trade, it works for everyone. The strategy has 4 elements: bias, entry setup, risk management, and a secret edge that I'll tell you about at the end of the video. So let's start with bias. You need a market which is clearly trending in one direction on the weekly or daily time frame if you are swing trading, or on the 4-hour or 1-hour time frame for intraday trading. What I mean is that you have to look at the chart and have no doubt about the direction it's going to go. As an example, I'm giving you this USD Yen daily chart. As you can see, whenever you were looking at this chart in this period of time, it was clearly going higher, and you can use this EMA with a 10 closing period to help you if you want, but yeah, you need to look at the chart and say like, it has to go higher in this case. And remember, this also applies to lower time frames, so it can be on the hourly, 4-hour, whatever. Once you have the bias, you need to enter the trade. So you will look for a weekly or a daily fair value gap if you are swing trading, or for a 4-hour or 1-hour fair value gap for intraday trading. Price has to enter the fair value gap, and then you can go into the daily or 4-hour time frame for swing trading, or the hourly or 15-minute time frame for intraday trading. And there, you will look for a candle that closes above or below the previous candle's high or low. As soon as the candle closes, you market enter. So that might sound a little bit confusing, but now I will show you some examples. As you can see on the daily time frame, there are many fair value gaps here. And what I mean is, once price enters these fair value gaps, okay, you can go into the 4-hour time frame, and as you can see, this is the setup that I'm talking about. So you see this candle enters the fair value gap, then after a couple of candles, you see a close above the previous candle's high. It's not really an engulfing candle because that will require the previous candle's low to be taken and then the close above. I just need a close above the previous candle's high. So as soon as this candle closes, you can market enter right here. So as you can see, price is entering the daily fair value gap. It doesn't close above any previous candle's high. As you can see, it continues to go lower until this candle. As you can see, this candle closes above the previous candle's high. So at the end of this candle, you can just market enter, and there you go. For what concerns risk management, you have to place the stop loss to the low or high made inside the higher time frame fair value gap, and the take profit is not fixed. You might take partials along the way, and usually it's a good idea to bring stop loss to break even after the first target is reached. So if we come back to our examples, as you can see, in this first case, you would put the stop loss right here, and in the second example, you would put the stop loss right below this low. So at this point, when you put the stop loss to break even, I told you you have to wait for the first target to be reached. And in this case, this was the first target because this was the leg that brought the retracements. So once price reached this level, you bring the stop loss to break even. And as you can see, price didn't test it, so it would have been a good management. Same thing here. Once price touches this level, you bring the stop loss to break even, and in this case, you would have been lucky because it almost tested right here, but it didn't. So in the end, it would have been a good trade. Take profit wise, I mean, you can do whatever you want. Honestly, I like to aim for higher time frame, swing highs in this case. So for the first trade, I would have liked to take a partial right here and then aim for these highs. So 3.5 hour here and then 5.7 hour right here. So at the end, it would be like 4 point something hour, and it would be a really nice trade. And for the second trade, honestly, I would only aim for this target because it was a higher time frame target. So I would expect a retracement after this level. So at the end of the day, it would be a like 3-hour trade. So before I show you all the trades that I opened to make the payout I told you about at the beginning of the video, I want to tell you what this secret edge is about this strategy. And I think you won't like this part, but I'll be honest, because this is something that basically no one is telling you, and they all try to lure you in with a new strategy or whatever, but this is my current main strategy, and I have to be, transparent and tell you everything. What I mean is practice. This is not a mechanical strategy. You still need to use discretion, and that comes from experience. This strategy works, but you still need to know when it's better to avoid entering, even if all the parameters are there, and when to enter, even if the setup doesn't look perfect. This is the reality of trading. You cannot expect to copy and paste a strategy you looked on YouTube and be profitable. You have to master the strategy. First of all, you have to trade discretionally. Because if you trade mechanically, you can be profitable, but it's really hard and the margin of profitability is not that high. So if you really want to make money with trading, you have to be discretionary. And to be discretionary and be profitable, you need to practice. You have to have experience. You need to process like a graphic memory from hundreds of hours looking at the charts, live trading. And that is something that no one can sell you. Because even if you buy someone's mentorship, they won't be able to teach you experience. You have to develop it on your own. So this was my first trade that I opened on my funded account. As you can see, is on USD CAD. Market was clearly bearish, aiming for this swing low. And on the daily time frame, you can see how price entered the daily fair value gap. Then on the 4-hour time frame, you can see this candle closes below this low. So I decided to market enter, placing the stop loss above the high. And I took 2 hours because honestly, I didn't know how much lower it could go. Obviously, I was aiming at this low, but you can be perfect all the times. And I still managed to make 2R, which is a good trade. I could have took a partial right here, bring the stop loss to break even, and then I could have aimed for this low and I would have got it. But at the end of the day, it's still profit. It's still a nice trade. And if you are always aiming for perfection in trading, you will never reach it anyway. So yes, there are margin of improvements, but I need to be happy with enough. So this was my second trade and you might recognize it because it's on USD yen and it's the second trade that I showed you for the examples on the strategy. Yeah, so as I told you, I entered right here, stop loss right here, and I made 3R this time. So yeah, it's even a better trade. I risked like 0.5%. On the other trade, I risked 1%. Anyway, I managed to make some profits. And yeah, I got very lucky right here because I had the stop loss to break even. And yeah, but there is a reason why I tell you that it's good to bring the stop loss to break even right here. I also entered late because as you can see, it's not right at the candle close, but it was like I just woke up. So I made it to the chart a little late. And this is my third and final trade for the funded account. So as you can see, euro was clearly bearish. And on the daily time frame, it retraced into this daily fair value gap, also retesting the EMA I told you about at the beginning of the video. So price entered, went down, but didn't close below the previous candle's low, went higher, took the high, and then closed below the previous candle's low. So here, I didn't enter immediately, because I already was in the USD yen trade, so I preferred to wait. But then after I saw that price action confirmed to be wanting to go lower, I entered, I placed the stop loss above the high, and I aimed for this level. I took 3R, so another good trade. I risk again 0.5%, but it's very nice. And yeah, in the end, it didn't quite reach this low yet at the time of recording. It started to retrace. And as I told you at the beginning of the video, this is a strategy that works on every market and on every time frame. So as you can see, this is an old trade of mine on silver, and price was clearly bullish. It retraced into this 4-hour fair value gap. And on the 15-minute, you can see how price closed above the previous candle's high. I placed the stop loss right below the low, and then I aimed for all-time highs, but then I closed it at 4R because I think this was the trade that allowed me to get funded on the other account I had. So as I told you, this strategy works on every market, Forex, metals, and also crude oil, because as you can see, this was a trade that unfortunately I didn't open, but as you can see, daily chart was clearly bullish and price retraced back into this daily fair value gap. On the 4-hour time frame, you can see how price entered and then made this candle. And with the next candle, it closed above the previous candle's high. So you should have entered long right here, placing the stop loss below the low. And obviously, I didn't want to show you this trade because honestly, it makes me feel sick because I didn't open it. But yeah, at the maximum was 25R. But yeah, as you can see, this is a strategy that can work on every market. The only market that I'm kind of afraid to open trades is like the S&P and Nasdaq on higher time frames, because on lower time frames, it's all good. But on lower time frames, honestly, like S&P and Nasdaq recently have been consolidating on a daily chart. As you can see, it was really hard to understand which direction price wanted to go. But the other day, actually, a setup formed because as you can see, so the market was clearly going lower. Here it was a fair value gap. So if you look at the chart, so if you look at the 4-hour time frame, you can see how price entered, started going lower, didn't close below any candle's low, then went higher, took the high, and then boom, right here, you could have gone short, placing the stop loss above this high, and yeah, here you would have brought the stop loss to break even, and right now you would be at almost 2 hours. Basically, yeah, you could have closed the trade right here because market is still consolidating, but maybe we'll go even lower. But that's it for this video. I hope you liked it. If you did, please leave a like, comment down below and subscribe, and I'll see you in the next one.